particular company. Monte Carlo Fashions is the first management on the show today. The company reported what was a weak set. So EBITDA and profit after tax were under pressure while the margins contracted marginally. To discuss this and more, we have Sandeep Jain, who's the Executive Director of Monte Carlo Fashions, joining in. Sandeep, hi, welcome to the show. Well, revenue was down around 3% on a year-on-year basis. You had profit which fell around 10% albeit that your margins were maintained at around 24% this quarter. But what led to this pressure that you've seen in terms of revenue this time?
I think in the beginning of this year itself, we already have guided our in analyst call also that the flat revenue we are projecting for this year. And we were hopeful to maintain our margins when we called at that point of time. What happened was the winter season was a little delayed. So because of that, we have to go for early USS. So USS started in 15th of December. So that actually, impacted the margins and that impacted some revenues as well. But we are confident that we'll be bounced back, definitely in the upcoming quarter.
All right, you will bounce back in the coming quarter. What's interesting is actually the EOSS that you started earlier and then winter started picking up in the latter part of the quarter. So will that also support you a little bit? Because it's like, you were caught on the wrong side, unfortunately, because of the weather. At the time you wanted winter to come, it did not come. You started selling products at a lower price and then winter suddenly came. So what can we expect here?
Yeah, that happens once in 10 years. When the winters are not on time, it's like rainy season only. So winter happened basically in January. So it was extreme winter in northern region at that point of time. So we were able to sell, I think, more than our anticipation in January itself. And the good thing is that we are sitting at a very low inventory right now at our stores, at our channel partners also. So that gives us the confidence for the next year as well. And also, the summer sales have started, particularly in the western region and southern region, and also dispatches have started. So I think that this quarter should be going to be better than as compared to the 9 months which have been passed.
Okay. Based on what you've indicated and the quarter gone by, your earlier guidance was, if I'm not mistaken, flat to 4 to 5% increase in revenue for FY24. But based on what you've reported in 9 months, which is a decline on a year-on-year basis, are you probably going to end the year in the red? On a year, I mean in terms of revenue.
I don't think so. I think we'll be near to our guidance, which is a flat to some positive, because January has picked up, so that gives us the confidence that we'll be achieving the guidance what we have given to the stock exchanges, to our analyst calls.
All right, and what happens to the EBITDA margins? Because we did see a contraction in EBITDA margins this time around, 17.5%, closer to 18%, perhaps because of lower realizations on account of the end of season sale that you did. Where do margins sustain? And while you're talking about that, next year also, what's your target for growth and margins?
Yeah, we have to take more provision for discounts in this quarter itself, because the discount is happening in the next quarter. So that has impacted the margins. Once the discount has started early, secondly, the discount was more as compared to last financial year. So we have to take more provisioning in this quarter itself, so that the next quarter is not impacted. That is why EBITDA margin is tough.
Okay.
So what's your target for both margins and revenue for the next year?
See, next year guidance we normally give in the first quarter analyst call. So we have to wait and watch for that particular next 3 months. But we are hopeful that as inventory is less, so we should be having a good year coming ahead.
All right. 2 segments which I wanted to ask you about is that the company is exploring export opportunities in Germany. That's what you had indicated in your previous call. Where does that stand? And you had also, entered into the leather shoes segment last quarter. What was the performance of that?
See, as far as exports are concerned, I have not indicated anything in my last call also. But yes, there are some portion which goes for export to Germany, but that is, I think, 4 to 5 CR only. That's not significant. Okay. And as far as shoes are concerned, I think, yes, we have in all our stores, which are more than 2,000 square feet, around 50 stores, we have launched the shoes category. And the initial response has been very encouraging. And we have also launched this at online also, where also the sale is happening. And I think in the beginning only we have sold around 80 lakh rupees of shoes. So I think the beginning is good, and we will be watchful for next 1 to 2 quarters, and then we'll go for a proper launch.
Are you probably looking to maybe scale down your, guidance in terms of opening new stores simply because of the kind of sluggish demand trends that you've probably encountered?
No, we are maintaining our guidance of 50 stores, which we are opening in this year also, and we are achieving that guidance. And also next year, we have the same guidance of 50 to 50 stores. That is 1 store every week. And I am hopeful that the economy is recovering back, and we have seen that in January the footfalls were more as compared to last financial year. And even the like-to-like growth has been 12%, which is better than the whole financial year last year, And we were having a declining trend of 5% in like-to-like growth, which is now only -2%. We are hopeful that will be almost neutral by the end of this financial year. So that gives us the confidence that definitely the next year should be better as compared to this year.
All right, Sandeep, on a lighter note, that's a pretty cool look. Is that from Monte Carlo itself, the clothes that you're wearing right now?
I mean, we have to clear an inventory also, so whatever is spending, I'm wearing it.
Well, this kind of inventory, I'm sure a lot of people will buy it. But thank you so much for joining in. Wish you good luck for, the fourth quarter. As you said, winters have picked up, so maybe sales are coming by, and hopefully you'll do flat revenue growth, as you pointed out. But the next year is something that we'll be eyeing in terms of growth. Take a short break, come back. Sanjeev Asthana, who's the CEO at Patanjali Foods, joins in to discuss their third quarter performance.